The report was, I think, disappointing. I don't think there's any other way to characterize it. At this point in time, we had hoped, particularly that in some of these sort of pandemic-driven categories, we would start to see some easing of prices. And I have in mind here used vehicles. And actually, that's, so the opposite was the case. These sort of positive trends that we had seen over the last 3 months reversed course in May with the CPI for used cars and vehicles actually increasing once again. So that's really worrisome. And then, of course, we've got all this price pressure coming from elevated gas prices that's really finding a way to channel through different categories of goods and services, because gas is such an important input cost for so many of the things that we buy.
And it really is an economic indicator, right? I mean, I know that they say traditionally once oil goes past the 100% mark year over year, then we are in a recession. And right now, I believe that oil is trading at about $120 a barrel. And this time last year, it was trading at about $70 a barrel. So what does that tell you?
I think what it tells us is that gas prices are really high. I would look at the value of a barrel, not just in terms of the dollar value, but also in terms of sort of what, how much savings consumers have, the overall position of the financial system and the broader economy. And I think on that front, there are still some sort of positive indicators, but the real worrisome sign is the trends that we're seeing. We continue to see that savings are being eroded, that consumers are reallocating spending, and that there's just not that much more room for folks to cut back before this is going to really start to sort of drive a contraction in consumer spending.
Right, and I know that economists worry when the cost of goods rise, but then the cost of wages can't keep up with inflation. So why aren't they keeping up with inflation? I think I was reading a report yesterday that said that CEO pay is up by 17%. Why haven't wages kept up with inflation? What is your take on that?
One of the things is just that, businesses are very hesitant to raise wages. Wages tend to be extremely sticky. They have so-called nominal rigidities. So as soon as we start raising wages, it's very, very difficult to take those back. Companies are out there trying to figure out how long they can keep wages where they are before they're going to have to raise wages to keep folks on the payrolls. I don't know that we're at that point just yet, in large part because the macro conditions are in fact starting to deteriorate. And so I do think there's a way in which businesses could keep wages under control right now without worrying about sort of widespread defections.
I want to talk about the CFO survey that came out that pointed to a recession happening in Q1 of next year. What is your take on that? Do you believe that we are headed for a recession? Do you believe we're in one now?
I think the risks of us being in a recession over the next 12 months are elevated. I think that the policy environment is very challenging, and that we've got some global geopolitical and macro factors that are certainly acting as headwinds. The war in Ukraine has sort of had an outsized influence on energy and gas prices, and then supply chain disruptions that started in Shanghai continue to reverberate through the economy. So I think there's a lot of, the operating environment over the next 12 months is going to be very, very challenging. And I think the Federal Reserve is going to have to do certainly more than it expected it was going to need to do back in February to get inflation under control. All of those factors together are going to push us towards slower growth. Whether or not that tips us into a contraction is a decision for the Business Cycle Dating Committee.
And we have a midterm election right around the corner, and many people are going to want to place the blame for a recession on the government. So where should the onus lie at this point? Is it the president's fault? Is it the Fed's fault? I mean, the Fed at the end of the day is in charge of monetary policy.
I do think the Federal Reserve was a little late in the game and starting to raise interest rates. And I think there's a very real risk that they're going to start losing some credibility, that people are going to no longer believe that the Fed can contain inflation. I look further back and say, that policymakers 2 years ago made some sort of a trade-off between unemployment and inflation. And they said, well, we would rather keep unemployment low or return it to a lower point as opposed to worry about inflation. And that sort of, I think they succeeded on that front in 2020 and the first half of 2021, and now they're really failing on the other side of that mandate, which is inflation. So I think there's a lot of blame to be shared across different folks within the government. And then there are just some external factors, frankly, that no one could have reasonably anticipated, particularly the war in Ukraine.